So in today's video, we're going to be talking about a legendary investor, what's his name, Danny Moses. He was in the film The Big Short. I haven't seen the movie yet, but I do plan to see this soon. I'm hoping, sometime next week I can see this movie, but I do plan to watch this movie, and I'll give you my thoughts about it after I watch it. So anyway, so this is a video about Danny Moses, how he's very bullish on the cannabis market at the moment, but he did come out not too long ago and says that he was bullish on the cannabis market. But if you listen to him during that time, you would have lost big time out of the market, because on February 14, 2019, stocks were basically at its all-time high. And, since then to now, the stock is basically below or lower than the 52-week low. So I do believe that, in the future, right now I think is a good time to be bullish. But, if you were bullish when you heard this video and went out and bought a bunch of stocks, you would have been down massively. That's the risk of the market. And, but right now he's coming out saying that it's a really good time to be getting into these stocks. So let's play a video so he can talk about it, and then I'll discuss it as he talks about the video. So let's go.
Sweeping the nation, our next guest is a legendary investor who says the cannabis craze is just getting started. Now, you may know Danny Moses of The Big Short fame. He was one of the investors who shorted subprime before the financial crisis a decade ago. Now he's calling the cannabis industry the big long. He joins us now. Danny, why is this such a tremendous opportunity? And when you say it's the big long, do you think it's going to be a more profitable opportunity for you than betting against subprime was?
Well, I think shorts can only go to zero, longs can go to infinity. So that's just the first category. The second is that I've never seen a sector have the political tailwinds, the economic tailwinds, and the wellness tailwinds that this sector potentially has. And the really interesting thing about the U.S. companies, the multi-state operators Tim was just talking about, is there's no debt. So the Big Short was full of over-levered, under-regulated businesses. These are over-regulated and under-levered businesses. So it's really tremendous. So when people look at valuations, I think you have to look at each company. And there's many states in the U.S. that are bigger than Canada alone. So I think people's first taste or, iteration on the exchanges here on NASDAQ and NYSE have been with the names in Canada. That's the way they think that you play it. But there's many other ways to express the trade.
And just to be clear for people at home, they don't have debt because they can't have debt. There's no bank that will lend to them currently. But when and if that changes through the States Act, through the SAFE Act, what happens at that point? How do you start evaluating multi-state operators and what their strategy should be to expand?
So right now, if you look at the names, they're doing private small debt transaction converts. They're really giving up way too much equity, more than they would ever want to. So the SAFE Act, which actually came out of the House subcommittee yesterday, would actually have the provisions in it that would just give the green light to allow banks to start lending. And there's two things banks can do. Banks can service these clients, obviously, and then everything from payroll to keeping their cash somewhere, using Visa cards maybe or MasterCard would be great. And then also the ability to issue debt. And I think we've already seen the big Wall Street banks be advisors to several companies, Constellation deal, obviously, Scotts Miracle-Gro, and they're very involved in the M&A aspect of it. And I think they're looking for an excuse to come into the space. And if you were to get debt to come in, the cost of capital would go down dramatically for these companies. And so I think that's a really interesting play that people aren't really focusing on right now.
And Danny, so in that regard, so valuations are going to come down with it. Ultimately, who benefits the most from debt coming into the industry? Or more importantly, if you think that's where we're getting to, and I agree with you, and we're working on stuff together, you have a dynamic here where there's certain sectors that will outperform. Where do you want to be right now for this phase of development?
I think you want to be in the U.S. multi-state operators right now. There's several names that are out there that are in 6 states, 9 states, 12 states expanding. The biggest problem has been it's a chicken and egg. Because the investors know they have to issue equity, many of these companies, they won't buy the equities because they realize look at an opportunity to buy them cheaper. So I think if you can find the companies with the best
See, these are some of his pickings, and I wanted to point out ANALYST and Liberal Health Science right now is basically they broke its 52-week low and it's super low right now. So if he's long these companies, if he's long Ianthus and Liberal Health Science, and he's a legendary investor, that's his title, legendary investor, obviously, you know, unless these companies' fundamentals changed completely within the 6 months that he talked about, you know, Ianthus and Liberal Health Science, which both companies I own stock in. You know, I don't know anything about Cresco Lab, and I don't really understand his logic behind Kush Bardos. I don't understand why he's invested in Kush Bardos, but hey, you know what? Maybe he sees something that I don't. But regardless, you know, Ianthus, I know is a pretty big multi-state operator. It was one of the cheapest multi-state operators right now, and Liberal Health Science is a smaller player in Florida, and they're, you know, kind of trying to be a multi-state operator. But the point is, Liberal Health Science, you know, is you know, a smaller company, and once the State Act passes, they can easily borrow money to continue their grow expansion. So, you know, this, you know, once that State Act comes in, I think Liberal Health Science stock could really take off, because banks can start lending money to Liberal Health Science, so then they can expand their facilities, continue to grow massively in the state of Florida, and become a competitor that can compete with True Eve once legalization comes to pass, and, you know, really multiply your money. At least I'm hoping, because I'm a really big shareholder in Liberal Health Science, and I know Ianthus needs capital to continue to grow massively, so Ianthus would definitely be borrowing money on cheap. But Liberal Health Science is my golden gem, and I do hope that it does take off. If it does, maybe my dreams of becoming rich won't will stay. Maybe. I'm hoping. I don't know. This is just a gamble. Liberal Health Science is a gamble. I do believe in this business, and I hope, you know, it can become a big major player in Florida and compete with True Eve on a you know, on a certain level. But, you know, that's just me hoping. I don't know if that will actually happen. So let's continue with the video.
With the best assets out there, and look what the opportunity set would be to issue debt instead of equity for growth, I think it's tremendous. So the enterprise values are underestimated dramatically.
We were just showing some of your picks, and not a Canadian operator was up there.
Correct.
Yeah.
I just think they're expensive. I'm not short them. They're difficult to short anyway. But I think the U.S. names are much cheaper on a relative basis.
So let me ask something. There's so much debt money looking to be placed in all kinds of things. Why are they not in here? Is there a lot of money available to sop that up?
Sorry. There are. So yeah, no, Tim knows there's private debt out there, but the terms that they're getting, it's great right now if you want to be the one to lend money. You can get warrant coverage, you get extra stock, you get options, and you're talking 15, 17%. That's just the stated rate. The cost of capital is much higher, above 20. I think that the Goldmans and Morgan Stanleys of the world are going to be looking for an excuse to do it once they see the green light to do it. And then I think you'll have an institutionalized debt market for this stuff, and you'll have a wave of high yield issuance with real assets. And I think that will be, from a valuation perspective, a very attractive asset class.
Danny, are you seeing an ecosystem develop around this in the background, waiting for the regulation? You know, there's like Ease, you know, the Uber Eats of delivery out in California. Are you seeing like some really interesting tech plays on this right now?
Yeah, there's so many different facets of the trade. There's tech companies, delivery, just like you mentioned. There are, you know, Uber apps basically for trimmers to go to a field and trim. There are so many different aspects. There's guys that came from TrueCar that are looking to basically apply that type of technology, because you can't do traditional advertising, obviously, in the sector. You can't go on Google, you can't do those things. So there's a lot of workarounds, but a lot of smart Silicon Valley people are entering this trade now, and it's really going to make it much more efficient. So it's a real greenfield right now.
My quick question would be, a lot of great news. I mean, we're talking about all the good things. Are there any bad things that could happen on the political front, regulation front, or is that just a foregone conclusion that's just going to get pushed forward?
We had an analyst yesterday from Raymond James saying this is Tulip Mania 2.0 or 3. Whatever version of mania that you want to put on that.
Right. I don't agree with that per se, because I think this is a much more secular trade than it is cyclical. Guy, to answer your question, there are risks. And every time I'm investing or looking at these companies, I have to remember that it's federally illegal still. It's not so much I worry about my reputation as much as what could go wrong with the company. So corporate governance, we've seen a few companies go through some issues with that. And obviously the market's going to punish you. If you're a cannabis company and you do something improper in your corporate governance, you're going to get hammered, and you should, because it's hard enough to find the right companies in this space without having to worry that things are not running well at the top. So,
last quick question of your entire portfolio. Can you give us a sense of what % is invested in stocks that trade versus private equity investments, VC, et cetera?
So it's probably 60 to 70% private equity. Merida Capital is where I have a lot of my investments in that. And in the public markets, using that knowledge from the private markets and applying that to the public, there's some great opportunities out there, I think. But it's nice to be in the private markets and have much longer duration and not have to worry about what the stocks do every day. But I think this is going to be a very great opportunity on the long side, and I think really excited to see how it develops.
Well, Danny, we hope you'll come back.
I'd be happy to. Thank you.
Danny.
Obviously, just listening to near the end, this guy obviously has a lot of money, and so he's probably moving money from his private into, I don't know, this is me speculating, into, cannabis stocks right now because they're near 52-week low. Why not, right? Like, if you're really out there to make money and you really believe in these stocks, then, at a 52-week low, you would be investing more. And he has a lot of money in his private, so he could start moving some money around and try to funnel it into cannabis. That's what I would do, especially, at its 52-week low. And I was really bullish on the cannabis space and saying that cannabis is the big long. And then just recently, he came out with a video. I'm not going to play this, but it's a podcast on Apple talking about, cannabis stocks and, how it's, a good time to be picking up these stocks, to be looking into these companies anyways. And then recently he came out with a video, another CNBC video, and I'm going to be playing this one. So we'll play a little bit and then I'll talk about it. So let's begin.
2018 was the year of the pot stock, and cannabis bulls predict another one is right around the corner. Here's their take on why right now may be the best time to get in. Are we going to look back at this time and think that was the time when cannabis really took off, where it was really publicly accepted, where the money could be made?
Absolutely.
Oh, yeah.
Oh, for sure. When we opened our first store, one of our investors was learning jujitsu so that he could better handle himself in the event that he did go to prison.
Steve White, CEO of Harvest Health and Recreation, one of the largest cannabis companies in the U.S.
What's changed? I mean, what is it about right now?
Historically, for the average investor, cannabis was way too risky. In a couple of years, your question is whether or not everybody's going to be on board. So right now you're in that sweet spot where you could make tremendous returns if you invest in cannabis.
We're at an inflection point, the golden era of cannabis investing.
Yes, I will say this is the golden era. I truly believe that.
Danny Moses, legendary investor who bet against subprime mortgages, a.k.a. The Big Short.
And Danny Moses, the optimist of the bunch, and a hell of a trader.
And so that was The Big Short.
Yeah.
Is this the big long?
This is the big long. It's the best macroeconomic opportunity I've seen within the U.S. markets in my career.
Was there a light bulb situation when you thought, this is it? This could be a huge business.
Well, I went to a dispensary in Denver right when the market opened, and it was eye-opening.
VIVIEN AZER, the first pot stock analyst for a major investment firm, Cowen & Company.
There were young people, there were old people, there were people that looked affluent and not. And keep in mind, 5 years ago, it was still really taboo.
In 5 to 10 years, how big will this industry be, according to your estimates?
Cannabis in the U.S. should be as big as tobacco in the U.S.
Those are just a few reasons why bulls say right now is the time to invest. Hear more from them, plus some fascinating arguments against investing in the space, the risk factors, all that during our new CNBC original documentary, High Risk, High Reward, Cannabis Inc. That premieres at the top of the hour, right after Fast Money on CNBC. Tim, you are a longtime investor in this space. You've got an ETF that has various positions. And I'm wondering for you, what do you see as the biggest risk factor out there?
I think right now, first of all, you have a lot of companies that are still relatively immature companies, with all due respect to some very sophisticated operators. But the environment where corporate governance and really assessing that landscape is the toughest thing to do in an early asset class. The regulatory environment right now, to me, is actually a tailwind. I know it feels like we've had so many tailwinds, but when you think about the industry, there's actually been a fair amount of headwinds in the last 6 months relative to where people thought. For example, the East Coast hasn't flipped and gone fully recreational. Everybody expected New York and New Jersey were are going to probably at least have made their approvals to be ready by year end. The dynamic with the DOJ, so the HSR holdup, which is the Hart-Scott-Rodino Act, which you don't need to know all those initials other than to know there's been already a number of very big deals in the sector that have not been approved because the DOJ hasn't signed off on them. A lot of people felt that was the government not signing off. I actually, in talking to a number of these CEOs, they're actually quite pleased with the DOJ. The DOJ is doing very thoughtful work. The DOJ is actually taking this industry extremely seriously. I think that's a catalyst. And then the big catalysts really are the Banking Act. So the Safe Banking Act, which will allow states who have approved and where the people have voted and where, as we know, constitutionally, the state should be allowed to do, let them be banked. Let them also have accounting practices that allow the companies to follow normal accounting practices. So I think the tailwinds out there, it's not a Pollyanna view. There's obviously a lot of pitfalls that can go on, and I think it's still very, very early stages. But this industry is still so disaggregated that there's a lot of room for consolidation.
Being a nascent industry, there's not the medical research to back up a lot of the medical claims, which is a big part of the investing story. And there's also...
You want to listen to the rest, you can. But regardless, there's a lot of bulls out there right now. And right now it's at 52-week low. So, I think Danny Moses, he's a legendary investor. If he's putting his money in it, I think eventually rich people are going to slowly shift their mind back into the cannabis sector, especially at 52-week lows. I think so. I think money is going to start flowing back into the sector. That's what I believe. So I'm hoping we have a very, very nice fall. But anyways, that's my opinion. I hope you enjoyed this content. Give me a thumbs up. It helps my channel grow. Subscribe for future updates and have a great day. Bye.